Why do we invest in the stock market? We invest in the stock market to make money, to gain shares or ownership of well-managed, profitable companies that are geared to the changing economy that we live in. As some of you know, I've done well. Basically, after I retired, I put what I had left in, and it has doubled. It at one point had doubled again, and I lost quite a bit of it, though, over the last year and a half. That being said, I'm not really worried about it because I understand why it lost money and where it's going in the future. So I'm good with that. Now, some of you know that I had a strange thing happen to me. I had bought a bottle of Pappy Van Winkle in 2009 for $250, and it recently sold in Sotheby's a similar bottle for $52,000. So that got me interested in investing in whiskey. And what I've learned as an alternative investment, I can far outperform the stock market and not have a lot of the headaches. So I want to take you into that so you understand it and see if it's right for you. That's all I'm here for. Educate you. You make your own decisions. We'll get right to it after I tell you this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
Okay, investing is about identifying undervalued assets or assets that you can buy at a discounted price that will appreciate in value over time, either because of the performance of the company that you're investing in or the rarity of the asset or the appreciation that is driven by demand. So one of those areas that I have discovered, as I just said, is that of whiskey. And I've spent the last month and a half studying it and understanding it and basically going through and studying over 350 whiskeys that are available to me that I can invest in. And I then study the history to see what is their past appreciation and then what is their current price and what is the market all about. And the whiskey market is all about prohibition. And when prohibition was lifted, the states were given the right to buy whatever or to sell liquors at whatever price they want. Some of them basically control it. They take it from the distributor, they mark it up, they put it in their state stores. There's 17 of them. The other 33 states, it's a Wild West. They buy it, they assess what they can make off of it, and they mark it up accordingly. So the disparity of price is enormous. Let me show you what I've discovered over the last month and a half and the work I've done. And I think it's 21 whiskeys that I've identified that I want to invest in. And then I want to show you the comparison over a past 5-year period of stocks. And then you can be educated as to, do I want to get into this? Does this make sense to me? Or do I just want to continue what I'm doing? So let me take you to my computer and show you how this all works. Okay, this is my latest spreadsheet on Excel. And what I've been doing, as I said, is trying to compare the investment in liquors or in whiskey to that of the stock market and look at past history and see if it can give me an indication of what the potential returns are and how they compare. So what I did was I searched 350 whiskeys, and I came down to 21 that I am very interested in. And what I've done is then shown you the names of the whiskeys and the details on them. And then I've shown the price that I can buy them for in Alabama. I've then shown what I can buy them for in the open market, and that is through Google. Searching liquor stores, where's the best price? I then show you the difference between what I can buy them in Alabama and what I can buy them online. And the difference is based on the state laws. Alabama is a controlled state. They buy from the distributor. They then mark it up a given percentage, and that's what they sell it for. The open market, basically, which is 33 of the states in the United States, buy it, assess the value of it, the demand for it, and sell it for whatever they can get for it. And as you can see, a bottle of Pappy Van Winkle distributed this year, that has sat in the barrel for 23 years, will sell in Alabama for $329.99, and the average price on Google is $5,000. So I'm buying it at a 93% discount. So then what I did was say, okay, what if I bought that bottle in 2018? What would it be worth today? Well, again, a 2018 bottle of Pappy Van Winkle sells for $16,500. That would give me an appreciation, if it did the same thing, of 4,900%, or a 5-year annual rate of return of 119. Now, if I buy it at the Google price, I'm going to get a 230% return, or an annual rate over the 5 years of 27%. And you can see I've done that on each of these whiskeys. And I've basically sorted them for the most profitable that I can buy for at the Alabama price, and compared it. And then what I did was show the best that you can get from the Google price. And as you can see, the best is this E.H. Taylor small batch bourbon, 100 proof, 7 years. If you buy that at $139, based on past history, you will sell it in 5 years for $799, and that will give you a 476 rate of return, annualized at 42%. And there it is. That's basically it. Here's another A.H. Taylor that you can expect to make a 33% annual rate of return over 5 years. A Stag's 33. Again, the Pappy Van Winkle 23-year, a 27% return. So I then said, okay, how does that compare to investing in the stock market? So what I did was I found 16 stocks that I'm interested in and that have been historically good performers, and I listed them. I then went back and found what could I have bought them for in 2018, in January of 2018, and this is the price. I then said, what are they selling for today? And what is my 5-year annual or 5-year return, and what is that annualized? And as you can see, it looks like the best one I could have done was 34% if I had bought NVIDIA, Apple at 29, Microsoft at 24, and you go on down. And then what I did was ask Google, what are the best performing stocks on the S&P? And they gave me MasterCard, T-Mobile, Broadcom, United Health Group. So that gives you a comparison, a visual comparison of investing in whiskey as opposed to investing in the best stocks in the stock market. And so, Mike, what's my conclusion? My conclusion is, with some work and some diligence again, in my case, and there are 17 states who price their whiskeys basically the same way that Alabama does. With some work, I can get a 119% return if I can find that 23-year-old Pappy Van Winkle. I can't come anywhere close to that in the stock market. And as you can see, that's true for a number of whiskeys. Here I got the lowest. If I can go and find these 21 stocks, the lowest annualized rate of return I'm going to get is 18%. Now, who do I sell them for? That's something I go into, or who do I sell them to? That's something I go into on the Discord and the book that I'm writing. And I'm also going to do some additional education on this on our Best of Us Investors Facebook group page. Why is that? The spam that is in the comments on YouTube is just getting outrageous. And so I'm going to, if you want to communicate with me, you need to come join the Best of Us Investors Facebook page, and that's where we as a group can communicate and not be overridden by spam. So that's my analysis of comparing an alternative investment, and this is something else I want to pursue further. What other alternative investments? There's a lot of information on real estate, on automobiles, but why I like whiskeys, there's no maintenance. I don't have to change the oil. I don't have to go collect rent. I just put it on it, buy it with education, and put it on a shelf and let it make money. In 5 years, my and again, look at here's a Wheeler's William L. Wheeler. I can buy a bottle for $99, and based on past history, in 5 years, in 2028, I can sell it for $2,400. That just makes total sense to me. But let's talk about it a little bit further and see if this makes sense to you. Okay, I think this is something that I can bring of value to you. I've studied it. I'm writing a book on it. I'm creating a Facebook group on it. I may even create a Discord on it, and I want to educate you on how to invest in whiskeys. Now, the other issue that I want to deal with is the spam that is involved in this YouTube channel anymore. It's a place where people get into the comments and just try to sell something, and I've given up on it. I can't control it, so I'm getting away from it. So what I want to do is, if you're interested in what I'm doing and how I'm investing, and you want to communicate with me, I want you to become a part of our Facebook group. I want you to go to the link in the description for our Facebook and join it. If, again, you want to communicate with me, follow me on Twitter. I'm going to put that in there too. But I have talked to Google about this. They give me a coach to help me produce my channel. And I have said, I can't deal with your comments anymore. I'm not going to police them. It takes too much time. I tell you who the spammers are, and you do nothing about it. So I'm going to find my own way. And so I'm going to do that through join my Twitter account. Here's the Twitter account. There's also a link in the description. And join our Facebook group. Here's the link to that. It's also in the description. And let's work through this liquor thing and this stock thing. I totally believe that if you will invest in the stocks that I have shown you over the next 5 years, you'll be very happy that you did. I basically believe the interest rate and the inflation issues that we're going through are all a product of the money that we pumped in to survive the coronavirus crisis. And once we get through that, technology of genome sequencing, genome editing, artificial intelligence, machine learning, quantum computing is going to blow this stock market up. And there is going to be plenty of money to buy the whiskeys that I'll be buying and investing in, and the stocks that I'm going to be investing in. We live in a time of change, and the change is coming more rapid, but we're focusing on the noise, and the noise is interest rates and inflation. That will go away. Don't worry about it. And then the issue of, well, the debt is getting all out of hand. Again, look at some of the work that I've shown you in the past. The increase in our national debt is nothing like what it was back in the 70s. As on a percentage basis, we were increasing our national debt at a much more rapid basis, and we've survived, and we will continue to survive. Interest rates will come down, will increase our gross domestic product to where it is larger than our debt growth, and it'll all be taken care of. I'd say trust me, don't trust me. Do your due diligence. Okay, I guess the conclusion of this is I'm going to be investing in whiskeys because I cannot match the annual rate of return in the stock market or in real estate or in automobiles. And I don't have any maintenance. And then I don't have the volatility that I deal with in the stock market and all the noise that goes along with it. So that's what I'm doing. I'm again inviting you, come join our Facebook page, follow me on Twitter. If you want to communicate with me, I'm happy to do so. All right, talk to you again tomorrow.